hard to know, but actually what was happening was we were creating lower highs. Okay, in hindsight it's easy to see. So just be aware of this. It might look bullish, but it's not. And what's effectively going to happen is the range is going to form. Just let the range form. This could take a couple of days. Okay, and there's 3 things that can happen from here, and I'm just going to go through all 3 scenarios quickly just to make you aware, and there might be a million more as well. I'm just coming up with the 3 that are in my mind, and just have all 3 of these are possibilities. Possibility number 1, a V-shaped recovery. I think it's very unlikely but everything is possible, so why not? And that would be a sign of strength. A V-shaped recovery is going to look like this. Okay, it's going to be a V-shaped recovery. It's going to look very V-shaped, and as far as I'm concerned, it has to take out that high. Yeah, if we get some kind of limp V shape, I won't be content until that high is taken. That pivot has to be taken out. Okay, that would be a break of that upper trend line too, and I want to see that too. I want to see a reclaim of this SR flip, and I want to see a break of that upper trend line, and I want to see that in this kind of V-shape idea. I want to see that pivot taken. After that pivot is taken, I don't want to lose this trend line. Once we take out that pivot, I would expect some kind of pullback, and I don't want to lose that trend line, and then I would expect continuation. Okay, that's what a V-shaped recovery will look like in the context of the current price action, right? If we see that, you can be bullish again. You can start being bullish. You can start buying again and feel confident that you're buying into strength, right? That's the sign of strength. If you see that, that's a sign of strength. That's what it's going to look like. Something like that. Okay, if you don't see that, it's not a V-shaped recovery. And so don't be misled by V-shapes. Sometimes you get a dead cat bounce. They look very V-shape-ish, but they're not. Okay, and the way to know is by going right back and reversing the price action all the way up to the pivot. Yeah, so when you do dead cat bounces, usually they'll stop at some kind of lower fib level. You see here it's coming into 236, a little bit of a mini dead cat. Usually dead cats come into the 382. This is pretty bearish to not even be able to get above the 236. Yeah, I almost think that we have more downside, to be honest with you, because I'm still seeing a lot of weakness in the way the price is moving and behaving. Okay, so just bear that in mind. So V-shape is what I described. If you see that, let me just mark it out just to have. Deleted it, didn't I? That's a V-shape recovery. I'm not saying it's going to happen. I don't think it will, but if it happens, I have an idea of what needs to happen. V-shape recovery. I'll just do V-shape. Idea 1. Okay, that's what I expect. That will be, for me, that's a sign of strength. The other thing that can happen is range bound behavior here, just right here. Okay, so the price doesn't actually go down, it doesn't go up. We get a little bit of a prolonged range here, somewhere here. It might actually just kind of do this for a period of a week or a few days, 3-4 days. Get a little bit of range bound behavior here, and then you get this. You break the range to the upside, you reclaim this SR flip, and then you reclaim that line too. That's a failed auction. Okay, that's a failed auction of the lows. It means you've lost this pivot, you've ranged underneath that pivot for a period of time, but there's not enough supply. There's too much demand in that range, over that short period of time, and it causes the price to come right back above the loss level. The first loss level of interest is this pivot that we've lost, this SR flip. And obviously for continuation, you'd be looking for it to break that outer trend line, find support, and then start taking out all of these highs to the upside. Yeah, that's a failed auction. I think that's very possible. I don't see why that's not possible. I think at the current, looking at the current price action, I think it's a coin flip really as to whether, I think a V-shape's unlikely, but I think this is a coin flip. It could or could not happen. And I think most people will just wait for the range to form first before they kind of see how the price plays out and whether they take a bias or not based on the price action that's forming. Okay, so that's a failed auction. That's quite bullish. Yeah, it's very similar to this failed auction here. Yeah, you see in the highs here, we had a little bit of a failed auction here on this pivot here. As soon as, you know, as soon as the price lost that pivot, properly lost it, it came to back test it, and it just started to move to the downside. So you're kind of looking for that kind of thing down here in reverse. So you have the range, and then you have these deviations, and that's basically deviation from the range underneath the range low, which is this SR flip that I've marked. Keep your charts very simple. Don't get too complicated. It's very easy to see what I'm drawing, and so it's very easy to know what needs to happen to see the change that's required for us and the market to flip back to bullish. Range here for a while, reclaim that level and break that trend line. Again, that could happen. If that happens in a couple of weeks' time, I'll be very happy. If we range here now for a week or so, don't go down, don't go up, and then reclaim that line, I'll be very happy. I don't mind. I wouldn't be fussed about not catching 56k if we're back above 59, 60k, and there will be very easy invalidation. Very easy invalidation, because once you reclaim that level, after you've created this structure underneath that level, you don't really expect to fall back down. That's not what you're expecting. You're actually expecting for the price to continue. That SR flip becomes a very easy invalidation after you've created a little bit of volume and structure underneath that level. Okay, you don't have to accumulate here if you don't want to, but there will be, like, every kind of dip could be a buying opportunity for a trade as long as you take profit, and one of those trades could end up in a really nice swing position if the price does do this eventually in a couple of weeks time and doesn't really make new lows, it just holds here. So that is effectively what I'm looking at there, is a failed auction of the lows. Okay, failed auction of the lows, idea 2, in no particular order. Okay, so we have that, we have our V shape, that's a V shape. V shapes should happen quite fast. I wouldn't expect us to be ranging here for a while, for a long period of time, if we V shape. Okay, and I think the probability of V shape are low, extremely low. So that's a V shape, that's a failed auction of the lows. Okay, and then continuation. Okay, there's two types of continuation that I'm imagining. More impulsive continuation, or another step down after a range bound behavior. So exactly the same thing as a failed auction, except that instead of going up you go down. Yeah, so instead of going up you go down. It's the same idea, but you have a little bit of a range bound behavior here, and you go down. Okay, head for lower. It could flag, it could pennant, it could create some kind of continuation range here, some kind of continuation structure. probably if it was to do this, there would be some kind of swing failure of the highs, just like we had here. A little swing failure of the highs here before the price crashed. Got to be very careful with these swing failures, because when they happen, you know, if you're in a long position, you can't be bullish when you see a swing failure, and you see that, you can't be bullish, because that's an entry for shorts. That's an exit for longs. So you have to be careful with swing failures. We've had swing failures, and they've been very powerful. And so when you do see them, you have to be very careful. Okay, to the upside and to the downside. You see how to the downside, this swing failure was extremely powerful. You see to the upside how this swing failure was extremely powerful. You see that? So you've got to be very aware of swing failures. And when you see them, don't continue to remain bullish or bearish, because they often indicate a change in direction, especially when you see massive liquidations that come with those kind of swing failures. This is what I'll be looking at: range bound behavior, and then a breakdown, another level to the downside. I think it's more likely than not, just because of the momentum, that this ranging will be much shorter if we are going to go down. Yeah, I think the longer we range here, the more bullish it becomes. Okay, I think it becomes very I think it's more bearish if we range here for a much shorter time and we just push down. Yeah, we're pushed down by the momentum of the moving averages that are now rallying to the downside. Yeah, and so obviously I'm using the Bollinger Band as a little bit of a guide to see the momentum. Yeah, and you can see it's kind of, they are having an impact on the way the price is moving. And so naturally you want all of those to flatten out, and the way for the price to flatten the momentum out is just to range here for a long period of time. Yeah, so if you want for these moving averages to impact the price in a meaningful way, then you wouldn't expect quite a significantly long range before we take another step down. No one can predict this. Like, honestly, it's so impossible. It's so hard to know what will happen. So I'm just giving you the ideas of the things that could happen, and then you can just keep an eye on it. And if you see it's happening, then you know it's happening. You know, you're prepared for what could happen. And I'm only giving 4 ideas. There could be a million more. Okay, because this is Bitcoin. Bitcoin can do what it wants. So a shorter range here for continuation. Okay, continuation, basically fill all of this rubbish gap and head down to the next level of support, which will be the top of this range here. Probably the easiest way to work this out is just to do a little volume range pull here. Top of the range, that volume area, volume value area high of that little mini range. It's probably where it's heading if we're heading down. Just mark out so I can delete this sort of thing. That's at about 52,435, thereabouts. It's an area. That's probably where you're heading if we range for a short period of time and we take another step down. Effectively what will happen is we'll range, the price action will be bearish, it will look really bearish, and then either some people who are in long positions will start scaling out, or eventually someone who is in a long from much lower down, wherever here in this range here, they're still in quite heavy profits. If you're still long from here, you're looking at the price action, you've lost the major level, you're not content, there's no V-shaped recovery, there's no quick recovery, so you're thinking to yourself, okay, let me just sell, close my position at market, the price will come down, and then the same person will probably just reaccumulate a little bit lower. Yeah, so that's also something that I'm contemplating. So it's kind of like continuation of this bearish move to the downside. It's always good to have that in mind. Yeah, because You have to be aware of the bearish and the bullish. And so let me just mark that. I don't really need to mark it. It's probably again, I mean, it's hard to know whether a swing failure would prelude it, but you'd like to see a little swing failure before it goes down. Heads down to that level in a very kind of sharp way. You don't really want it to range for long here if we are going to go down. In a very similar way that it didn't range for long here, you want something very similar to, you want something to match this here. Okay, that's kind of what you want to see, and that would be let me just mark that. That would be my other idea. Shorter range for downward continuation. Okay, that's that. That's that one. That's a longer range for a failed auction. And then you have the V-shape idea, which is that. Okay. Now, there must be other ideas too. Like there must be a million of other ideas. Okay, I'm just coming up with the basic ones. Ultimately, if you want to go long, you need a sign of strength, and that's either this or this. You could have a shorter range to go up. It doesn't really matter as far as the length of the range. I think longer ranges are going to be more likely to create to easier to get rid of this momentum. You'll be able, the longer this goes, the more bullish I become. Okay, I'm bullish, but only on the monthly time frame or the weekly time frame at the moment. On the daily time frame, I'm not bullish anymore. I'm still bearish, but because we're at the lows of a higher range and potentially we could go up, I will contemplate going up and what I would need to see. And therefore, if you are starting to see signs of going up or the price trying to go up, then naturally you want to try and long here rather than up there if you do see that. But I mean, it's a lot riskier, and so therefore you have to have really good management of your risk to reward management, you know, here. Whereas when you go up there, you have a really easy invalidation because the structure that's created is your invalidation. Okay, you could also, it also could be short, a short consolidation and go up. You see this consolidation here, this was quite short. This was about 2 days and it went up. Okay, honestly, I think this is it's very different what we're experiencing now to before. Yeah, I think this price action here in this range is very different to this. I think what we're experiencing is a lot more bearish, yeah, than this price action. Part of the reason why is because it was at the all-time high. We made a new all-time high and we had failed auctions. That's part of the reason. Part of the reason is because at this price here, people were still thinking, ETFs are coming. They were still thinking the halving is coming. They were still thinking for higher prices because of the all-time high hadn't been taken yet, you know. So the sentiment of the market was a lot more bullish in this price range. Here, there's no more ETFs coming. There's no more halving coming. There's no more higher prices coming, yeah? So the sentiment has changed, yeah? And so that's, you've seen some failed auctions. The sentiment is very different to here. So while here, at the lows, we had a failed auction, but only lasted 1 or 2 days and went back up. Honestly, I think it's very unlikely that that happens, yeah? That we have a repeat of that. I'm just I think the longer we range here, the more likely it is to happen. So rather than, if we were just to be here for the next few weeks, 2 weeks, I'll be more interested in that idea to go up. Yeah. And obviously I could be wrong as well. Like it's just, and then the reason why is the moving averages, and the other moving average obviously that needs to move up is the ones that Tim the Chin was suggesting. We might have to go down and tap those first, and so therefore you might get into another situation, just thinking about it now, which kind of coincides with what Tim the Chin was saying. It would be a sharp down and up first. So let me just kind of contemplate that. These are your moving averages, Tim. So your Tim is looking at basically this one. Basically that's what Tim the Chin is thinking. Maybe a little bit of a short consolidate, 1 or 2 days here and then down. You know, tap that EMA 200. And then what? Well, I don't know. No one really knows what's going to happen when we hit that level. If we hit that level, but the problem with crypto is it always overdoes. It always overcorrects or always overpumps. Yeah, I'm just thinking to myself, is where maybe we go lower. You know, like it's crazy, but I think people looking at the price action, when they're looking at the charts, and if they see what I'm drawing now, I don't know how bullish people are going to be to just suddenly buy that. And so again, what you really need is you need the price to tell you, and you need the price to find support. You need to see that. And then you need the price to come back up. And the problem is, and this is the problem, if you create that market structure at the lows and then come back up, you could be coming up for a lower high for continuation. It's going to be very difficult to buy as the price is coming back up, because you could be buying into bearish continuation to take this low again, whatever low you put in. Yeah, it doesn't have to go all the way down, but it could be another kind of that. Yeah, it's going to be very difficult to know what happens if we are going to form support here. We're just going to have to monitor it quite closely to see. But then also, depending on how we move down, if we don't consolidate for long here and we move down, you may just as easily go up and then push up. You know, you could, and you would only really know that this is strength until we get right back above that level. And that's really the tricky part, because the price has moved all the way to 52,000. Now you're seeing strength after the price is back at 62,000. It's a hard pill to swallow, but that's kind of what you want to see. It'd be hard to buy that after you see all of that. But that's basically, again, it's a deviation from the range, a failed auction, but the price has gone much lower. It'd be hard to buy that. It'd be a lot easier to buy if you saw this. If you saw the price range for a little bit, fall down, come up, come down, swing failure, these lows for a breakout. It'd be a lot easier to buy that, because you'd see a swing failure. Yeah, and you see the price can't go down anymore. You see a little bit of rejection off support. You could easily buy that, and then see what happens as it comes back up to the highs. Yeah. But you'd be expecting for continuation. Again, it'd be the same idea: break, back test, continuation. So you'd be looking for something like that to form, to get back up. Okay, I think it's early now, and I just, these are just all ideas. I'm not like saying I don't know which one's going to happen. I don't even know if any of them are going to happen. Anything can happen, really. But let me just draw this as well. This is I'm gonna mark all of them. It's kind of like it's like a double bottom into 52k TLB break. There we go. Right. So those are kind of what I'm thinking. And we'll see what happens, right? Could you short this? I hate shorting lows, yeah, but technically, if this is a higher time frame head and shoulders pattern, you could short the neckline. Of course you could. You could totally short the neckline. You're not expecting the price to come back into the neckline. That's the neckline. It's that SR flip that I've drawn. Yeah. And actually what's interesting is we have a gap formed. We've already rejected off the gap. You can see that. That's a little bit of a rejection. I've marked it off of my single prints. So if we find resistance there, you're not really, ideally you kind of want to fill the gap and short the neckline for continuation. But depending on how bearish or bullish it is, we won't know until the New York opens. Oh, it's opened, hasn't it? So obviously New York is not really giving us good vibes. We might just range here potentially for continuation to the downside, you know, unfortunately. And it'd be hard to short. It's a gamble, really. So you need an entry. So you need an entry, you need an invalidation. At the moment, the range is forming. Let the range form. Short the highs, long the lows, see what happens. Yeah. Take your profit and then see what happens. Okay. And then don't think about higher time frame position trading or swing trading until we see strength. Again, strength is just getting back above these lines. I think these are really important. So you have this failed auction idea, something like that. Back test, up, break, up, or that will be a V shape. Okay. You don't need to jump into a V shape. Just let it happen. Yeah, let it happen. Let the market show you what's happening. It doesn't really matter if you catch a V shape or not, because if it's a real V shape, you'll always get this pullback, find support, which will still give you a very good entry, and it'll be very safe as well. And by then you've also reversed the momentum. Okay, I really highly doubt a V shape. A strong, like, I think it's like it's less than 0.0